Hello everyone, my name is Alondra Jean Gomez. I am a fourth year student of BSBA, major in financial management. For today's video, I am going to discuss investing through mutual funds. So why invest in mutual funds? So mutual funds pool money together from a group of investors and invest that capital into different securities such as stocks, bonds, money market accounts, and others. So among the reasons why an individual may choose to buy mutual funds instead of individual stocks or other funds are diversification, convenience, and lower cost. Mutual funds are a safe investment if you understand them. So, um, main reasons why an individual chose investing in mutual funds is that, as it said, it is for diversification and it is also convenient and barato siya compared to other funds. So, the the longer or the more nimo siya nga masabtan, mas magka-interested pug ka nga mo invest ani nga certain fund. So the lower expense ratio of direct plan translates to higher returns on the investment, which keeps compounding over the years. The investment in direct plan would be worth more over a period in a comparison to investment in regular plan of the same scheme. So, as stated here, magkadugay daw, magkadako sad ang madawat nimo as kanang compared also to other scheme or fundings. Fund objectives, types, and characteristics. So we have here objectives, growth, or also known as capital appreciation. Mutual funds with a growth objective hold a portfolio of company stocks with an expectation that they will grow in value over time. So, mo ni ang isa sa objective niya nga kintahay ang kanang imong gi-invest na adjud na siya mabalik nimo nga more than sa imong gi-invest. Example, imong 1,000 in a long way or long run or in a certain period of time, mahimusad siya og 10,000 yan na ba para mura kanang in a way nga nag-invest ka nasa mabalik unlike sa uban nga investment. So income. Funds with an income objective select securities such as bonds and preferred stock that can provide regular income payments and preservation of capital. With a preservation of capital objective, it is important that an investor's initial investment does not lose value. Funds with this objective, example money market mutual funds, generally hold very short-term cash equivalent assets. Types of mutual funds. So mutual funds are divided into several kinds of categories representing the kinds of securities they have targeted for their portfolios and the type of returns they seek. We have here equity funds, the largest category that of equity or stock funds. As the name implies, this sort of fund investments principally in stocks. So fixed income funds. Another big group is the fixed income category. A fixed income mutual fund focuses on investment that pay a set of rate of return, such as government bonds, corporate bonds, or other debt instruments. So the idea is that the fund portfolio generates interest income, which it then passes on the shareholders. Index funds. So their investment strategy is based on the belief that it is very hard and often expensive to try to beat the market consistently. So the index fund manager buys stocks that corresponds with a major market index such as the S&P 500 or the Dow Jones Industrial Average or DJIA. Balance funds. Invest in a hybrid of asset classes, whether stocks, bonds, money market instruments, or alternative investments. So the objective is to reduce the risk of exposure across asset classes, and this kind of fund is also known as an asset allocation fund, and there are two variations of such funds designed to cater to the investor's objectives. So money market funds, this one is very familiar and usually heard from different discussions, and it is consists of safe or risk-free short-term debt instruments, mostly government treasury bills. So this is a safe place to park your money. You won't get substantial return, but you won't have to worry about losing your principal. So among all, this is the most or the safest investment you are into, because kanang from the word is that itself government, so ang gobyerno gapadagan ani nga kind of fund. So a typical return is a little more than the amount you would earn in regular checking or savings, and a little less than the average certificate of deposit. So ani nga fund dili siya tanto nga dako kayo imong mauli, but diri sa kumpante ka og safe and na assurance nga safe jud ang imong kwarta maskin pa og gamay, kay asa man ang dako kay kag kanang mabawi, pero at the end of the day dili siya kanang or wala siya assurance nga kanunay or mo survive siya in a long run. So income funds, these funds invest primarily in government and high quality corporate debt, holding these bonds until maturity in order to provide interest streams. While fund holdings are appreciate in value, the primary objective of this fund is to provide steady cash flow to investors. As such, the audience for these funds consists of conservative investors and retirees because they produce regular income. Tax-conscious investors may want to avoid these funds. International or global funds. So from the word itself, international or global means foreign or internationally operated. So invest only in assets located outside your home country. Global funds, meanwhile, can invest anywhere around the world, including within your home country, and it's tough to classify these funds as either riskier or safer than domestic investments. But they have to tended to be more volatile and have unique country and political risk. So these ones have higher risk than the others because kanang example, ikaw nakalocate sa Philippines, but this certain fund is located at US, so riskier jud siya kay dili ka kanang physically or personally maka-update sa kanang sa funding kung okay ba siya, kamusta yang kuan, kay layo man ka. So another way around, ang imong mabuhat lang is maki-communicate ka through social media or unsa pa na diha nga pwede nimo mabuhat through communicating them para masiguro nimo nga ni-exist pa ba siya or di. So specialty funds, these types of mutual funds forgo broad diversification to concentrate on a certain segment of the economy or a targeted strategy. Sector funds are targeted strategy funds aimed to specific sectors of the economy, such as financial, technology, health, and so on. Sector funds can therefore be extremely volatile since the stocks in a given sector tend to be higher correlated with each other. So we have here characteristics of a mutual funds. Low fees or expenses. So mutual funds with relatively low expense ratios are generally always desirable, and low expenses do not mean low performance. So example, kana bitaw mo kay Unitop, may kun jud na bitaw na mato nga. Lo, Unitop mo to na dali ra magawa. No, it doesn't mean ani nga fund nga kanang barato na siya pero low yung performance, kay depende man sa gadumala bitaw kung kamo ba siya moda, kamo ba pud siya na ba siya kaugaling nga strategy para unsa kanang papa-survive ani nga certain nga funding. So in fact, it is very often the case that the best performing funds in a given category are among those that offer expenses ratios below the category average. Consistently good performance. Most investors utilize investing in the mutual funds as part of their retirement planning. So therefore, investors should select a fund based on its long-term performance, not on the fact that it had one really great year. So we have here sticking to a solid strategy. The best performing funds perform well because they are directed by a good investment strategy. Investors should be clearly aware of the fund's investment objective and the strategy the fund uses to achieve that objective. So, needed jud ang strategy or solid strategy in a certain, not just in funding but also other constitution para tinabitang when consequences or problems or challenges may meet along the journey na sila kanang strategy nga pwedeng magamit para ma-overcome na siya. So, trustworthy with solid reputations. The best funds are perennially developed by well-established, trustworthy names in the mutual fund businesses such as Fidelity, T. Rowe Price, and the Vanguard Group. So, from the word itself, trustworthy with solid reputation. So, dapat mo pili po kag funding nga kasaligan, and aside from that, mag-background check ka kung good ba ang flow sa iyang funding or wala ba siya issues with regards on like example, naka-scam na ba siya, naka-dispal ko na ba siya, na ba yung mga kanang misinterpretation sa iyang mga customers, na ba sa what unsa na kanang na ba sa mga kanang mga reklamo nga gikan sa investors nga makapaguba or disappoint pod or maka-discourage sa future nga investors. So, plenty of assets but not too much money. The best performing funds tend to be those that are widely invested in but fall short of being funds with the highest amount of total assets. When funds perform well, they attract additional investors and are able to expand their investment asset base. So, however, there comes a point at which a fund's total asset under management or AUM becomes so large as to be unwieldy and cumbersome to manage. So, nasa uban nga kana bitaw nasubra nagdaghan mo invest but ang nagdumala kanang kuwang og manpower bitaw or kuwang og kanang pamaagi unsaon pagdumalaan ang certain. So it may come at point nga kanang magka problema nun siya instead nga makatabang kadaghan na invest but in that way magkalibog-libog na unsay buhaton ug unsay mga pamaagi nga gamiton kay wala kanang kuwang pud og uban og idea kung unsaon na siya paghandle. So, investing fees and charges. So, mutual funds will classify expenses into either annual operating fees or shareholders' fees. Annual fund operating fees are an annual percentage of funds under management, usually ranging from 1 to 3%. Annual operating fees are collectively known as expense ratio. A fund's expense ratio is the summation of the summary or management fee and its administrative costs. We have also here shareholders' fees, which come in the form of sales charges, commissions, and redemption fees, which are paid directly by investors when purchasing or selling the funds. Sales charges or commissions are also known as the load of a mutual fund. When a mutual fund has front-end load, fees are assessed when shares are purchased. For a back-end load, mutual funds fees are assessed when an investor sells his shares. So some funds also charge fees and penalties for early withdrawals or selling the holding before a specific time has elapsed. Also, the rise of exchange-traded funds, which have much lower fees thanks to their passive management structure, have been giving mutual funds considerable competitions for investors' dollars. So articles from financial media outlets regarding how fund expense ratios and loads can eat into the rates of return have also stirred negative feelings about mutual funds. So selecting funds in which to invest. The first one is find a match for your needs. Each fund must explain its objective. So, discussed earlier, every funding should have its own objectives para nasa reason sad nga mo survive or mo continue in the long run. So this can help you decide if the fund matches your own investment goals. First, income fund manager. So buys and sells stocks, market listed companies that have strong balance sheets and pay regular dividends. Second, growth fund manager. Typically chooses to invest in companies judged well placed to grow their earnings significantly over time. Growth funds focus on firms that reinvest their profits in their business rather than paying them to shareholders as dividends. Next, value fund manager looks for unloved, cheap stocks in the hope that company's worth is realized over time. The manager hopes the share price of the firms will increase so they can sell at a profit. Level of risk. So consider the level of risk you want to take. Though bear in mind that the lower the risk, the lower the returns you will expect to make. So asset class. If you are happy to take on relatively high level of risk, you might want to buy a fund that is purely invested in shares. If you want to tone down the risk, you might also want to buy a fund invested in a mix of different asset classes such as bonds. So, size of companies. Funds that invest in large companies that are already successful are usually seen as a lower risk than funds investing in small upcoming companies that are more likely to fail. Region. Some funds invest purely in companies based in developing countries called emerging market funds. So investing in these regions would usually be deemed as higher risk because their companies tend to be more fragile. So remember, never invest in something you don't fully understand. So last discussion, one of my example about this one is the RIPA scheme. So like me, na scam sad kay lagi gadali kay dako kayo ang return sa ginvest nga kwarta, not knowing and not fully understanding the story behind it. So lesson learned. We need jud nga mo fully understand in every investment that we do so that walay mahay inig human. So making money investing in real estate. Real estate can be a great way to make money as an investor. Not only do real estate investment have the potential to produce excellent long-term results, but also tax advantages, and they can add diversification for your overall investment strategy. So real estate has set millions of people on the path to financial freedom and could do the same for you. So there are 5 ways to make money in real estate. First one is investment properties or rental real estate, which is the most obvious way to make money in real estate, and buy an investment property or several. Next one is real estate investment trust or RETS, or pronounced as REIT, which is a special type of company designed to invest in a real estate assets. Many REITs are traded on the stocks market and are very easy to buy and sell. So we have here fix and flips. So this potential lucrative form of real estate is investing essentially involves taking a rundown residential property, completing repairs and or renovations on it and selling it at a profit. So fix and flip, example ani is kanang kakita kag kanang sakyanan nga second hand gibaligya og 100,000, but to make it look better or good, imo na siyang gipa-repair, then gipa-recolor or something, gipasinawan. So in a good way around, imo siyang gibaligya and imong nagasto ato is gipalit mo siya 100,000, but nagastuan sa nimog 50,000 for repairing or pagwapahan nimo to siya nga certain nga sakyanan. So imo sad siyang gibaligya og 250,000. So you're earning a profit through buying. Mura ra gud siya kanang mag-retail bitaw ka nga na magbaligya ka ay mapalit ka pero imo sang ibaligya. So wholesaling. Real estate wholesaler serves as a middleman between motivated home sellers and real estate investors. So wholesaler finds cheap property investment opportunities. If you've ever seen those "We Buy Ugly Houses" sign, those are typically put down by their wholesalers. So the wholesaler will enter into a contract to buy the property, but then find a real estate investor who is willing to pay it a bit more. The difference being the wholesaler profit margin. So, aning wholesaler, mang-wholesale ka og kanang certain nga kanang butang example na ibay nga gibaligya. Nya ikaw nga kanang gusto po ka nga inegosyo ning certain nga bay, gibaligya ni siya sa tag-iya og kanang 1 million. So imo siya gibaligya 1 million kanang 1 million ang balay sa tag-iya, pero ikaw nga murag silbi nga mag-wholesaler ka, imong gihanyo ni siya sa tag-iya. So gibaligya sa tag-iya og 900,000, imong gipalit nya imo pong gibaligya og 1.1 million. Nga na nga paagi nakaginansya gyapon ka sa imong pinalit. Pero sa imong pagpalit sa lesser nga kanang tawagan ay lesser nga price, aside kanang unlike sa uban nga gusto mo abila na nga certain nga buy, pero kung sa gihatag nga price sa tag-iya mura jud to, unlike sa nimo nga wholesaler makagidigan kag discount. So crowdfunding. Real estate funding is a relatively new form of real estate investing, but there is certainly money to be made. When a developer or professional investor identifies an opportunity to build or buy a commercial real estate asset, they may choose to raise some of the project's capital from individual investors. So, for example, a crowdfunding deal might aim to purchase a hotel and spend a few years gradually renovating the rooms, and ultimately sell it at a profit. There are several reputable crowdfunding markets, but it is important to point out the most and the best deals are limited and accredited investors only. So that's all for mutual funds or mutual funding views or ideas. I hope you understand, and take care, and God bless us all. Thank you.